What is good, boys? Welcome back to another video. Very quick, today's topic is draw on liquidity. I think it's something that I haven't really explained and I think is extremely important for anyone getting into day trading. I think it's one of, if not the most important concept that one should get into if they learn day trading, if they're trying to increase their probability, increase just their knowledge overall about trading. So, what exactly is draw on liquidity? Well, very simple to me. Draw on liquidity is essentially just a point of interest within the chart. It's a point. If you want to think about it like this, it's kind of like a pointy area usually within price within the higher time frame most of the time, and that specific area tends to be a place where price usually goes to. Maybe not immediately, maybe within some time, but usually price ends up going to that area, that draw. Um, I'm not going to necessarily explain the liquidity part. I don't want to get too into it. I want people to get like the foundation of it, get like a very like dummy version of it. So that's how I want to explain it for kind of like the newbies, kind of wanting to understand it at the most basic level possible. So I'm not really going to delve into anything crazy necessarily, maybe in another video. But for now, I just want to say, yeah, draw on liquidity is essentially a point of interest where price usually and tends to go to and tends to sweep, essentially. Just goes to it and kind of reacts away from it most of the time. Now, just so you guys know, before I really start and delve into the video, I want to say price is not random. Price, like I said, goes to certain areas and you can't necessarily predict it, but you can have like an estimated guess. You can have an estimated guess on where you think price will end up going due to statistics and due to history kind of backing that. Everything within trading, within the stock market, within finance is essentially a theory. It's not all a law, theory and law, where it's something that tends to usually happen but isn't 1,000% factual. And a law is, yes, this happens every single time. So what I'm saying is draw on liquidity, it's essentially a theory that tends to happen a lot. Why? Because so much history is backing it. So I want you guys to know price is not random. Price tends to go to certain areas, and if you don't know how to necessarily distinguish it, then trading might not be for you. So it's good to understand what exactly is draw on liquidity. What exactly is draw on liquidity? Like I said, it's a point of interest. It's basically a pointy area, like let's say right here. For example, previous day high, right? That is a pointy area in which price tends to go to. Now, I'm not going to get into the whole liquidity aspect, but it kind of think about it like this. It's just a pool in which price tends to kind of dip in, and then what does it usually do after? It tends to not reverse, yeah, but kind of bounce away from it. So price kind of goes into certain areas, taps into it, then reacts from it. That's really like the most simple way possible in what draw on liquidity is and kind of what price tends to do. It follows it. Once it sweeps it, it kind of reacts from it most of the time. Now, to me, what exactly can be draw on liquidity? Well, what I usually look at is previous day high, previous day low, session highs and lows, as in London high, London low, Asia high, Asia low. If you are doing like smart money concepts, you could say that 4-hour unfilled gaps are good draws on liquidity, like a 4-hour higher time frame as a whole. You could say equal highs, equal lows. I don't really pay attention to equal highs and equal lows, to be honest, but you could also say that's a good draw on liquidity. But yeah, usually when I kind of set up my bias for the day, I'm more so looking at levels and in which I think price could go to if I get the right confirmation. So like I said, I would be looking at, has previous day high been taken already? If previous day high has been taken already, what do I necessarily expect? I usually expect price to react from it and possibly go lower, maybe towards a little bit closer London low. And if you really want to go further, previous day low. So it kind of like a ping pong in a sense. It goes to this direction and then bounces back. Now, why exactly is draw on liquidity so important to me? Well, it's a good kind of prediction in a sense and where you think price is going to go. You don't want to go into the chart not having any sort of idea of where you at least think price is trying to go, because if you essentially like have, I guess, an estimated guess or like a hypothesis basically saying, okay, well, because we just swept previous day low and because now within the micro we're respecting bullish order flow, what do I think will necessarily happen? Well, I see that, let's say London high. London high is still intact. London high still hasn't been swept. So what do I expect to happen? Well, I believe since we just swept previous day low, we can at least draw to London high. It's very simple. It's just a ping pong effect in which price usually, acts. Very important though, I do think that draw on liquidity isn't the absolute only thing that you should be looking at. I think that you should be having some sort of a filter in the way you trade, in the sense of, okay, yeah, previous day high is intact, hasn't been swept yet, but you do want to make sure that at least within the micro, or at least within, like the 15-minute, 30-minute, 5 minute slightly, it's respecting order flow, or it's respecting, in simple manner, trend. So you don't want to, let's say it sweeps previous day low, you don't want to immediately long towards London high. You don't want to do that. What you want to do is at least get some sort of confirmation added upon that draw on liquidity, as in sweep of previous day low, now we're creating bullish structure, tapping into 5 minutes, whatever it is, retracing and respecting, creating bullish order flow, at least within the micro, 5, 15-minute, etc. And then you can actually take something to previous day high, London high, etc., etc. So that is exactly what I mean. You want to kind of add a couple of things together, as in draw on liquidity, trend, and just other sorts of confirmation. Those help a lot. Understand that draw on liquidity isn't the only factor. There are many other factors that could help you. Also understand that if price at that moment is currently chopping, like I've said 1,000 times, there might be a possibility that price isn't immediately going to your draw on liquidity. You should get more confirmations. That's why I'm saying. So expect or look for a trend, and do not usually take any sort of choppiness or any sort of range without understanding that your probabilities will be slightly lower. Now, for someone who really needs to know like the absolute basic, in the sense of like a rule that you should implement upon yourself, is if you do not have a draw on liquidity, if there is absolutely nothing that is open to being taken and open to being swept upon, then you should not trade. Maybe take a break, skip that session, maybe go to another session, Asia session, whatever, or just wait to the next day, just sit on your hands, because trust me, if every draw on liquidity has been taken, then it's best to sit on your hands, not do much, and it's basically it. You don't want to force something where prices already, let's say within the previous session has taken every draw. At that point, you're just gambling, and that's the last thing you want to do, especially with such a high risk niche like day trading, like something where you're losing money if done incorrectly, obviously. So last thing you want to do is just waste money by taking something in which you shouldn't be taking, like price taking out all draws on liquidity. Don't take that. Don't take anything if price already took out both session highs, etc., etc. I know the video is pretty short, but it's kind of the absolute basic. I want to, within the next video or a couple other videos, really delve into exactly what it is, and also delving into other topics that I think are very important within a technical aspect. But to put it very short and simple, if there is no draw on liquidity, if you do not see something adamant like previous day high, etc., then it's best you do not take a trade. When you do see a draw on liquidity and you do see price respecting trend overall, that's the best time to take something. That's the best time to, if anything, risk more, or at least be a bit more hands-on. So that's basically it for me. I'm going to release this video. I'm going to edit this video and release it like the day after. So today is Wednesday. I should be releasing it Thursday or Friday, but that'll be it for me. Thank you guys for watching. Like, subscribe, leave a comment. Check out the link in bio. It's my server community that I'm trying to build. It's completely free, has resources, just communication, answers to any questions. And yeah, thank you guys for watching. Have a good day. Peace.